Welcome back to the FM Realty Report podcast. And on today's episode, we're going to talk about the forecast of real estate, both nationally and locally. And hello, Don.
Hey, Roman, how you doing?
Doing great. Thank you. How are you?
I'm good.
Excellent. This will be an interesting topic today. And I think we're going to be able to give enough, not so much detail, but enough of a broader idea so people who are listening and not even from around here will understand what's happening nationally, and who are looking at interests locally will have an idea as well.
It's absolutely what we're going to do. And it's a snapshot of what's going on today. This information comes largely from the National Association of Realtors, as well as our local association here, the Greater Syracuse Association of Realtors, and our MLS. So that's the data point. Real estate is doing well. And there's a lot of reports coming out, a lot of data coming out on the national level. And I'd like to just remind people that there's a few things that are still true. Real estate is still the best path to an individual's wealth overall. It's been proven time again, and even through the things that we've been through recently, it's still the case. Small example, Phoenix. If you bought a home 10 years ago in Phoenix, your home today is worth $300,000 more in 10 years. Wow. And we've got those examples all over. But I just want to put out some information out there so people truly understand. There's been a lot of reports out there that mortgage debt is high. Mortgage debt right now, nationally, is at a record. It's $14 trillion.
As of today.
As of today. Yeah. And that says, oh, boy, that's terrible. Well, that's not the whole picture. What has to go along with that is, what's the asset value of real estate? Today, the asset value of real estate is $54 trillion. The net worth of real estate today, residential real estate, is $40 trillion, balanced against $14 trillion in debt.
Wow.
So it's impressive, and it proves the fact. All real estate is the path to wealth for the majority of people.
To quickly touch on that, why is that debt so big? Well, back, let's say 80s, 70s, the interest rate was so high. People don't even know. It was in what, 20s?
Yeah.
Something,
1982. I sold a house in 1981, I believe it was, at 17.6% interest with 12 points.
So what does that do? That puts a cap on how many people can buy homes. With the interest rates lower nowadays, it is more attractive for people to buy a home.
Absolutely. And interest rates are lower than those historic times in the 80s, yet they're higher looking back the last 10, 15, 20 years. And we'll get into that. There's a couple of other things that we need to understand. As you look at this asset, net worth, mortgage debt, at the same time, unlike 2008, mortgage delinquency rate is at an all-time low. Only 2% of all mortgages are 90 days old, or in 90 days delinquency or longer. Only 0.05 of 1% of homes currently are in foreclosure. Those are record low numbers.
That's really, so that's because more job opportunities?
We'll get into that. Jobs is huge.
Stable income?
Jobs is huge in this whole discussion. It's also interesting to note that 92 or 93% of all homeowners bought their home through realtors. So not only is housing the best path to wealth, working with a realtor is the tool to that path. And that's important. A couple other interesting statistics. 34.2 million people have no mortgage. 53 million have a mortgage.
So you said 34 million, so that's just
35.2 million people own a home free and clear.
That's almost just over 10% of our population.
Of the entire population, including kids.
Yeah, nationally.
And 53 million do have a mortgage. Housing shortage. We all hear about housing shortage. Yes, there's a housing shortage. And I'll get to some local statistics that'll be more meaningful when we talk about this. But it's important to understand a couple of things when you talk about housing shortage. For a long time, rates were at 3%, 3.5%, 2.7%. Who's going to give up a 3% mortgage to buy a house for a 6.9 or 6.8% mortgage?
Right.
So that is part of the reason. Higher rates are keeping buyers out of the market. We know that for a fact. Once the Fed starts reducing rates, we think, and there's some interesting correlations here that I'll give you, we think clearly that that's going to change the dynamic. Many people are betting, many economists are betting that the Fed's going to cut rates once, maybe even twice this year, but probably 4 to 6 times in 2026. But let's just get a little perspective on that. Let's say that the rate goes from 6.9 to 6% nationally. That difference in interest rate, given the wages people are making now, opens up affordability to a home buyer for 5.5 million people will now qualify at 6% that don't qualify at 6.9%. When we've had these kinds of interest rate changes in the past, what normally happens is 10% of those people take advantage and jump into the market. So that means over the next 12 to 18 months, if rates come down to 6%, which the National Association of Realtors is predicting, in the next 12 to 18 months, that's 550,000 more people who will be buying houses.
Nationally.
Nationally. Yes. And you had mentioned jobs. Roman, you're absolutely right. Jobs is the driver here. We have 7 million more jobs post-COVID than we had pre-COVID. That's a lot of people making more money. Those people want to buy houses, but again, they're holding off due to interest rates. And that's why we mentioned what happens if it just drops down to 6. None of us are predicting it's going to go back to 3 or 4%. We don't see that, although we didn't see it the first time it happened either. So you never know. But people definitely are waiting for rates to go down. It's still a little better market out there today nationally in terms of availability of inventory. Still not enough. We haven't been building homes.
I think as far as people holding off for better rate, I believe it depends on who is the consumer. Is the consumer an investor? Then they might say, yeah, I have money, I can sit on this. I'll put this money maybe in this investment for a year or two, wait on that return until the rates change in real estate. And there's consumers who they just want to buy a home and live there for 30 years or who knows. And for them right now, they'll buy it at this rate. Maybe they'll refinance later for a lower rate.
There's no question. There's no question.
The holdback, I think, is a mix.
Yep, it is a mix.
On who the consumers are.
And you're right to mention different demographics, different buying groups. The statistics change. But what we're trying to do today is give an overall. I mean, if you take the overall market nationally, the strong markets are the West and the Northeast. Texas, the Carolinas, the Rocky Mountain states, they're all doing pretty well. Cost is high. Not only do we have interest rates, but new construction. We were talking about new construction, and you had mentioned earlier when we were talking off mic about the New York State Electrification Act, which is going to make homes more expensive. And I know you want to talk about that a little bit. Yeah.
Well, you mentioned the Electrification Act. What was the regulation? So how many units does it have to be?
Right now, starting January 1st, 2026, and I don't think 95% of the consumers in New York State know this. This is a New York State law. Starting January 1st, 2026, any buildings built 7 stories or under will not be allowed to be fueled by fossil fuels.
Okay. So
no propane, no oil, no natural gas. Now, there's still a lot of question mark as to if you're a developer and you've got a project approved and gas is already there, is it going to be able to continue? These are still unanswered questions. But the direction is clear. Fossil fuels in New York State are going to be a thing of the past. And this legislation was passed back in 2019 and going into effect now. So after that, there's another time frame where all buildings above 7 stories are going to have to be non-fossil fuel, as well as cars, et cetera, et cetera. So this is going to add to prices in New York State. It's going to be more expensive. There'll probably be some programs, tax incentives to offset some of it coming up. This is what we're being told, but it's still kind of unknown.
Right. And so if they can use, so primarily it seems like what they're trying to get rid of is use of natural gas. They're not,
And coal and oil
right, but on
and propane.
at our level, I mean, electricity is also being used with coal, right?
Mm-hmm.
So just because we're getting electric stoves now in our homes doesn't mean coal is not being used in order
Correct.
to electrify it.
Correct.
And I know New York State is pushing to expand the solar farming, and New York State kind of welcoming other companies that I know are coming in here from out of state, maybe even out of country, and,
Sure.
and building solar farms here. Excuse me. But natural gas, it seems like so desired. And I believe what the issue here is pricing.
I think that's some of it. I really do. I also think that there's just the political reality in Albany where the legislature believes that fossil fuels correctly contribute to climate change, and that, hey, look it, we've been pushing this can down the road since the 70s, and now it's come home to roost, and it's going to be difficult to achieve. All that said, we have to realize the background. I mean, how many plants switched over the last 10, 15 years from coal to how many power plants switched from coal to natural gas because of emissions more than anything else? So how does that play into this? It's still all...
Yeah, I'm not taking away from what the bad it does as far as greenhouse gases, but I'm looking at it from the demand, from the consumer point of view. Like, well, I want to use natural gas because, number one, it's cheaper. Number two, power outages is not a new thing. It's been going on for many years. So power goes out, and then if you're in the cold climate areas or really hot areas, you cannot cool your house down, or you're freezing. And natural gas, it seemed like it's one of those neutral power sources that backup generator just for my furnace,
correct,
and the refrigerator, and I can
you want to use backup generator.
And that's why we have so many homes in the Northeast that do have fireplaces.
Well, you're absolutely right. Natural gas is the heating source of choice, especially in our community, and it's remains to be seen how this is going to work. If you talk to builders, you talk to developers, they're still trying to get their head wrapped around it. There's been talk of pushing back some of the dates, doing this in a more tiered manner, a more delayed manner, but so far the legislature has not agreed to do that. So I think when the rubber hits the road in January and June and December of next year, then we're going to see the rubber hitting the road, as I said, and we're going to see what's happening. But, let's talk locally just a little bit.
Okay.
Our rates are at 6.7, 6.8, 6.9%, depending on your credit score, maybe a little higher, maybe a little lower. But those rates are twice what they used to be just 4 or 5 years ago. So when you talk about housing shortage, you do have to recognize that there's two aspects of that. When rates are high, buyers may not be able to afford what they could afford beforehand, and now what they can afford is not available because prices have increased. So it's a dual-edged sword. Additionally, if you've got somebody like me who's got no mortgage, or you've got somebody who's got a 3% mortgage, 4% mortgage, and they want to move up, buy another house, and go to a 7% mortgage, that's not happening. So there does have to be some adjustment in their rate. But let me just give you a couple of interesting statistics for our local market. This is here in Central New York. Our listings are up year over year, 52%. I'll put that into perspective. We had almost no listings a year ago. Closed sales are up 8.6% year over year. However, the median price has risen 4.2% over the last 6 months to $235,000. Remember, it was 140s 5 years ago. In the first 6 months, however, that was a June figure. The 52% is June. The closed figure I gave is June. Over the 6 months, we're down 4.9% year over year in the number of listings and closed sales. The June median price, even though listings were up and closed sales were up, is now $250,000. 4.2% increase over June of 24. And now let's look at the apartment market. Rents are up, depending how you calculate them, where, location, city, suburbs, affordable, non-affordable, somewhere in the vicinity easily of 60% over the last several years. That's a huge increase. We know that there's a tremendous shortage in apartments as well as there is in housing. We also know that due to Micron, we have to up our game. And there are 7,000 apartments approved and being built right now in Onondaga County. And as we mentioned in our previous podcast, there's another 10,000 plus in the pipeline that are seeking approval. Mm-hmm. There are several things happening there. We have to realize that in new construction and the price of new construction, you're not going to be having apartments being built with $700 or $800 rent. It costs too much. You're not making a profit as an investor. And if your investor isn't making a profit, guess what? He's not going to build. Now, the city of Syracuse has done something interesting, which I applaud. It depends on the number of units you're being built, but if you're building apartments in the city of Syracuse, depending on how many apartments, there has to be a percentage of those apartments that are going to be rented to the affordable housing market. And there's definitions of all of this. So at least there's the attempt to speak to those people in most need in our community. And that need is severe.
Gosh, you said $700-800. I don't even remember last time.
Well, 4 or 5 years ago, you can do that. And if you look at our most common definition of affordable housing and that demographic, somewhere, if you work it all out, it comes out to $700 to $800 is what a large percent of our community can afford. Mm-hmm. 62% of the city of Syracuse are renters.
Yeah, and let me ask you this. You've been in the industry a long time, and I feel like when the rates go up, less people buy homes. Mm-hmm. The rent goes up. When the interest rates
Correct.
When the interest rates come down, more people buy homes.
Correct.
The rent goes down. But what I have been noticing lately, the rate of the interest rates mm-hmm. has not been affecting the rent, and I'm wondering if this is isolated to our area.
It's not isolated to our area based on the national data that I have. It is a much more intense situation here, though. Again, Micron. You have to realize that we had a housing shortage before Micron. Mm-hmm. Now with Micron and everything that's going to happen, that housing shortage is going to be potentially more acute than it is now. And as I mentioned earlier, there's that reality of the cost of new construction. Mm-hmm. And the cost of new construction is such that rents can't go down when things cost more to build. And the cost of land is not going down. The Electrification Act we noted. Many of us would like to see more affordable opportunities out there, not only for those people in crisis, but however you define middle income. Mm-hmm. It's just very, very difficult now. You also have to realize the longer-term demographic, and there's a study that everybody, and we'll do a podcast on this, the ON plan for Onondaga County strategic planning, the city housing study that was done. One thing that is very clear is that we have an aging population in the city and in Onondaga County. And one thing that I've been wondering about for a long time as I continue to be so involved in this, we have to be careful, in my opinion. We start building too many apartments, But then the aging population starts, let's face it, let's not be maudlin, but in 15 years, a sizable percentage of our population is going to be dead. Mm-hmm. We're not going to be here anymore. I might be one of them. The reality, though, is then there will be potential of excess inventory on the marketplace. Because of the size of the demographic of our aging population, this is based on today's statistics. Everybody's wondering, with Micron and the suppliers coming in, is that going to change that demographic? Are there going to be enough younger families and younger people coming in to change that demographic that might cause us to be in a situation 15 years from now where we have an oversupply? Mm-hmm. It's a delicate balance.
It's definitely a good point to talk about. Maybe we can talk about this on the next episode. And not only that, but I think on the next episode, let's also talk about the upcoming talks of a nuclear plant.
That'd be great.
In upstate New York. And we'll talk on the balance of age group and local population and how that's going to affect our housing. Mm-hmm. and inventory, and we'll talk about the nuclear plant.
That sounds great.
All right.
The last comment I'd like to make about housing, and this is something that has kept me going as a realtor, not only as a business, but also as a member of society. People have to live somewhere. Mm-hmm. Homelessness has increased in this county to a point where it's a disgrace. People have to live somewhere, and we as realtors have to be part of the solution, and we're working hard to do that.
I always say people will always need a roof over their heads.
Absolutely.
Even the rock age, we were living in the caves.
Absolutely.
Not out
Absolutely.
in the open.
Let's not go back there again. But I look forward to next week's podcast talking about the potential nuclear plant up here. I think it would be great.
Thank you, everybody, for listening. Please follow us on social media. And if you would like to reach to Don or myself for your real estate needs, the contact will be in the description. Thank you, everybody. Bye.